Hey guys, check out this conversation that I had with Matthew Anka. We had a great conversation around real estate investing. I know it's a little different from what we usually do, the algorithmic or the crypto kind of trading, but definitely a very interesting conversation, especially when you pay attention to his returns and kind of how he's been doing. So he's been, and the conversation that we've had was really about buying apartment buildings on pre-construction and how you could use that to leverage your investments. I think it was a great conversation, and let me know what you think. Enjoy. Hey guys, so we're here with Matt Anka, who's a prominent real estate investor. I know you've been doing this for quite some time, right? And we're going to learn a little bit about real estate investing from Matt. Yeah?
Sure are.
Yeah, cool, man. Want to tell us a little bit about yourself and kind of how long you've been doing this and whatnot? I know at one point you had maybe like 8-9 units.
Yeah, well, first of all, thanks for having me on your channel. It's great to be here with you and your fans.
Yeah.
And yeah, I think today's purpose was really just to understand what real estate investing can be for someone who's doing this on the side or someone who's doing it maybe more full-time and building a business. So covering multiple arrays of the industry. Yeah, I guess my background, I'm someone who's always been passionate about business, someone who's always been passionate about sales and entrepreneurship. I've worked in tech for the last 5 or 6 years now. And originally how I got started in real estate was just kind of working through Monday to Friday, 9 to 5, but still building a real estate portfolio on the side to the point where it's grown here in Canada, and now I'm looking at some international markets to do it in as well.
Yeah, you see you're looking at Costa Rica, you're looking at Miami at one point as well. Yeah.
I think
Miami just exploded recently.
I think home ownership just all over the North America at this point has just exponentially grown. So yeah, I think here in Toronto has always been a very, very strong market. Toronto is obviously the biggest economical hub here in Canada, and some arguably say in North America. So it's a great market to grow downtown, and also just looking now to just diversify the portfolio a little bit more in other countries, and also like to have a little bit of fun with what I'm doing. So if I'm going to go down to Miami for a weekend, it'd be nice to have some property there and crashing it for my own sake.
Definitely got to come visit.
100%, you will be there. I think next time we got a great shot here, but next time hopefully we'll get that shot in South Beach.
Yeah, I prefer the beach shot. You know.
I think so. You got to mix both, I guess.
Yeah.
So I guess the story really started. I guess I'm a big proponent when it comes to home ownership. Yeah. It's kind of hard to. I know there's a lot of people that say, hey, sometimes you don't want to have home ownership, but I think in 99.9% of all scenarios, having that home ownership is something that I'm a big advocate for, and there's just multiple benefits for it. But starting for myself, I think my first property, I was the age of, I think it was 2014 or 2015, would have been 25 years old at that point in time. And it was a primary residence. And I think that's something that you just, when it comes to real estate investing, you probably want to do it as a primary benefits, and there's just multiple reasons to do this. And one is the whole avoidance. As soon as you go from primary to investments and you want to sell an investment, you're gonna pay high capital gain taxes.
Right.
But if you get it for yourself for a primary reason, I think that's a great area to do it. And just for starters, just to dabble into the market and just get a good understanding of how you can build income when it comes to primary residences. A couple things you want to know is that you want to be in the property for a long enough period of time. I know CRA or the IRS in the US will have different kind of guidelines as to how long you need to live in these properties.
Right.
So you want to get to know what your local and federal tax implications are when it comes to home ownership, and how long you need to be in that property for. I started from a primary, but I was young at that point in time and just starting to build a career, and I was okay with having some roommates in. So I'd rent a couple doors out.
That's good. So you're doing the rental thing very early, yeah?
Very early. Again, just kind of started as a primary, and just going through the banks and getting those kind of preferred rate as a primary as opposed to doing it as a first-time investment made sense. But as I got the primary, I think I had some colleagues that I rented a couple doors out to. So building a little bit of both, home appreciation under my own name, and also just renting out a couple doors and getting a little bit of a monthly cash flow from that perspective. Yeah. But it came to a point where I probably didn't like living with other people.
You could do that in your 20s, 30s and 40s is a little different.
I think so. It becomes a little bit difficult, and just personal preference at that point. But I know a lot of people who've done this throughout their university years, lived with other people, or maybe they'll find a good property and look at an income potential property that can be a primary residence where you can like sublet your basement, or you can have a complete side entrance that's isolated and still get that benefit. So there's a lot of different kind of like strategies coming down to the property type that you can look at that may make sense from a primary residence perspective, but still get a little bit of rental cash flow if you'd like to. So I've always held on to that property. I think if you are going to do this from that standpoint, you probably want to do it. Again, I was younger at the time, so closer to a college, closer to university, something that has either tourists coming in or students coming in, or even like close to a little finance hub in a city. If you could have it around these types of places, you could probably rent that place out if you'd like to.
Yeah, you're talking about like an Airbnb type thing, or are you talking about just month to month?
This was so long ago. I think in 2014. I don't even know if Airbnb was around, but we'll probably touch on Airbnb, and I'm a very pro advocate when it comes to Airbnb, especially in those tourist areas. I think that's when you start getting into those discussions about Miami. That's what I really see happening down there, because people want to go to the sun, and it's always going to be a hot kind of list destination spot to kind of checklist every single year.
Yeah, no, we used to rent out a place actually in New York before, and that was just amazing.
Yeah,
like the summer times were just like our rent. Like we were renting out one room, and our effective rent was like zero. Living downtown Manhattan, we were paying nothing for rent. It was awesome.
Isn't that great?
Yeah.
Because I think you were traveling a little bit abroad and going back to Toronto and renting your place out essentially.
Yeah. Well, we had 2 rooms, so we'd rent one of the rooms out, right?
Yeah.
Yeah.
Okay.
Yeah.
Again, coming down to like that primary ownership, and then looking at those kind of residential structures that can offer you that opportunity to rent it out. That makes a lot of sense, because you can essentially live there for free at the end of the day if you want to.
Right. Yeah.
So coming back to the place that I first had, I actually kept it because it was very close to. It was in Ottawa at that point in time, so it was very, very close to the local colleges and universities. So I kept it. It made sense. Then there was I moved to Toronto at that point, so kind of same idea. Went to another property. It's funny, I didn't even see the property, but we know the Toronto markets are really, really good, and I just told my realtor, like, hey, get it. It's like at a good price right now. I don't
you didn't even see it, and you bought a place.
It's just a little condo.
Okay.
And the decision to move here was like really, really quick, so I didn't really have the time to go see it, but my realtor did, and I trust his judgment. So we had got that property, and that would have been in 2015. Lived there for a little bit, and around the same time, like Toronto was going through a big like condo boom at that point in time.
Yeah.
So I don't even think I lived there for too long on that one. But then just went to the next one, a little bit central, closer to this where we are right now in downtown Toronto.
So you kept buying like your primary residence and you kept moving like that, right?
Exactly, and the whole point here is that if you can meet those guidelines to stay inside the CRA or the IRS's good books in terms of that time requirement that you need to live in that primary residence for, you don't have to pay your capital gain taxes.
That's great.
Disclaimer on that though, like the CRA or the IRS, depending on which jurisdiction you fall into, if you have a history or a reputation of doing this, they can actually technically come to you and say, hey, you're doing this strategically and you're avoiding capital gain taxes. We may have to like audit you, or we may have to. So you actually have to be aware of that. I always, when you're in business, it is very important that you have like your power team of resources around you. So I always talk to a lawyer. I always talk to my accountant for these types of decisions that can have big implications on it. You want to get yourself familiar with whether you're doing this for yourself or under your business's name. So don't talk to a corporate accountant in that sense. But yes, technically the IRS or the CRA can come after you and perform an audit on you if they see that you're strategically doing this to avoid capital gain taxes.
Interesting.
But at the same time, if you have a good enough reason as to why you keep doing your primary residences and moving, if there's like a life reason for it, hey, you know what? It could be as easy as, hey, it's closer to my new office location. It's going to save me a 30-minute commute. Or, hey, my family's upgrading right now at this point. I need bigger space. So there's a lot of reasons that you can have, and there's gray area to it, but there's also black and white. So just get yourself familiar with it. Always speak to an accountant before you do these types of decisions. But yes, at the end of the day, it was just kind of primary residence, and lived in there long enough and taken advantage of an upbeat market. And it ended up being quite beneficial at that point. I like the idea of primary residence because I did the investment properties. It's a little bit of work. It's a little bit of a hassle. I am a full-time software tech professional, so managing this can be tough. So you probably want to have, especially if you're out of the city with your rental properties in other parts of the province or cities, like I was, having those types of property managers to be able to look after it. But at the same time, like, you got to ask yourself if you want to take on that kind of level of commitment and stress and implications that can come into my busy work life. So I prefer the primary residence, and I started to move a little bit away from the investment in terms of the rental properties and having tenants live in these properties, just because it was a little bit of a time commitment for me and a little bit of an additional stress load. Right. And primary residence was really just white glove service. You open the door, it's kind of ready to move in, and you don't have to worry about tenants. You just live in there yourself, and there's multiple ways that you can gain revenue from it. One, property appreciation annually. You could look at your pay down in terms of the amount of equity that you're paying down because of your mortgage every single month. So then you walk away 2, 3, 4 years later, and it's a good amount of additional income that you can make.
Yeah, for sure.
I started to go into an area of pre-construction, as you know. I think the area of pre-construction, when I kind of figured this out, I was living in these primary residences myself for like 3-4 years at that point in time. And then I kind of said, look, hey, if I can look at some of these strong markets, like a market in Toronto, and I can kind of do the same without living in it. That's what pre-construction is. You're going to the builder, you're buying a purchase and sale agreement for a unit that's going to be completed in 3-4 years from now. You're not even living in it. So if you find the right pre-construction project with a good developer and a good part of the city, I could still have a primary residence and kind of hold on to these properties. And then by the time I take possession of them, I'll either move into it myself, it'll be a new primary residence for myself, or I can decide if I want to have an exit strategy, like I'll rent it out, or I can, in my specific situation that I'm going through right now, assign them. So what an assignment means is you can find a buyer on the market for whenever that interim period between you purchasing the agreement and you taking possession of the unit, you can assign the rights to another buyer on the market.
Okay.
For that market value.
So you think that's better than holding on to it until it's built and then selling it afterwards?
It'll be very much dependent on the circumstances. Some people do like that. Again, this is coming back to, I knew that I didn't want to be, I don't want to be a landlord in some circumstances, so I could either take on a tenant coming into a unit, but I guess your question is whether or not it matters to have the unit built and then sell it.
Right.
And I like that approach because a lot of buyers, I think when you get the most amount for your sale is when a buyer can specifically walk through that unit.
Right.
But it's all going to be dependent on the market and the circumstances. What I like doing is there's a period called occupancy when the unit is structurally finished, but it's not registered as a building by the banks yet, and the banks have to register the building for you to get a mortgage on it. But there's an occupancy period for about 6 to 8 months where buyers can come through the unit and walk through it.
Oh, that's cool.
And kind of that same concept, see what the unit looks like without you having to close on it and sell it.
Nice. So you don't need to get that mortgage, so you can sell it before you have to get a mortgage and all that sort of thing, right?
That's exactly it.
Oh, that makes sense. Okay.
So you're holding on to this property for that entire period, still gaining appreciation every single,
So in a way, you can basically increase your leverage, right?
Exactly.
So you can go around doing that all over the place, right?
You can. Now I'm still doing this with a primary residence. I'm still doing this with holding other pre-construction properties in my portfolio as well.
Right.
So you're doing this as you're holding multiple properties, but it's tough, as you know, when you're not a large corporation to get mortgages. At the end of the day, I've incorporated myself, but the buying power that I have or my corporation has isn't quite sufficient for me to get mortgages on, let's call it dozens of properties.
Right.
So if you can hold on to these pre-construction properties, you don't need those mortgages in place, but you can still obtain the rights to the property, the purchase and sale agreement to the property, and you can still take advantage of that annual appreciation in the hot market.
That's really cool. Yeah, I guess this makes sense too in a fast-growing hot market, right? It's probably good in obviously Toronto, but then probably Austin or Nashville,
100%.
right? Something like that. I would imagine this works really well, right?
What you want to look at the trends are is where that real economical hub is, and especially right now in this day and age, everything is really tech driven or finance driven.
Right.
So you want to kind of understand what those demographics and what those cities look like, and what urban areas can really have that sustainability and that type of growth. So Toronto's a great market. Miami's actually a really, really good market. They got one of the biggest finance districts in North America. And of course,
I think all my friends from Wall Street, every single one of them moved to Miami. It's ridiculous.
That's why the prices are being jacked up right there.
Yeah, for sure.
New Yorkers going to Miami, they're used to Manhattan rent prices. Now they can go to Miami at like a quarter of the price. It's
crazy, you know.
And they get the nice sunshine.
It's like you get rent for less than $4,000 a month. Like what? It's amazing.
So they'll drive it up, and those types of properties I think will be very good long term. So I see that as a very good market to invest in, and also just that's the one exception where I'll probably do a rental, but more in the sense of an Airbnb as opposed to a rental. I just think the margins are much better on an Airbnb.
Oh, for sure.
And the reason I don't like rental is that it's very hands-on, but there's services that are white glove services that can do all the property management, all the turnover, all the cleaning for you, even do the guest registration, take care of all of it for you. So if that really is something that is available, then that'll kind of make me think twice when it comes to rentals.
Yeah, for sure. I think that's the only way that you can scale beyond a certain point, right? Because I know you want to save money. You don't want to spend money on a management property or a management service kind of thing, right? But at some point you're going to have to, right? When you get big enough, or if you want to continue doing the rental thing, because it sounds like you've been going away from the rentals and doing more of the focusing on like the gain in the capital, the capital appreciation based on pre-construction, that sort of thing, right? It sounds like that's been more of your focus lately, right?
I think so. And again, when it comes to some of these non-primary residences, that's going to all go through my company, my corporation, rather than put it under my name. Right. Because if I start selling properties when it comes to an investment under my name, it's taxed at a very, very, very high tax rate just because I work full time. Right. But doing it through a corporation, it's attached at a much less rate, and there's a lot more like write-offs and expense that I can have. But again, you got to start somewhere, and I kind of did it as a sole proprietorship at the start, and then it kind of merged into a corporation as it scaled. But to answer your question, when it comes down to like the rental properties and doing it, it's really just comes down to the margins. So if I'm going to have a person in a 12-month rental lease from me, my margins aren't very, very great. It's probably not that hands-on as opposed to like a high turnover rental business like an Airbnb where you're probably flipping them out every 4 or 5 days, getting the cleaning person in and going to reorganize the whole condo at that point. It really just comes down to the margins. I'm okay to pay someone to do that services if the spread on the margin's much, much higher than it would cost for me to hire a property manager on a long-term rental lease of 12 months. The margins, I've just looked at them and they're just not that great. So that's probably why I wouldn't do it. And it makes sense for you to kind of find that partnership with a property management company that can do it all white glove service for you if the margins are good.
I've heard that actually gets better too when you own like multiple units in one area, right? So like I was actually talking to someone the other day that owns like a multifamily, has like one building with like 9 units in it, and he said the management is much cheaper doing that, right? So you have one person that can just take care of all of it, right?
I think like any business will operate off that same model, that if there's a lot of repeat business, and especially through one customer, there's going to be additional incentives for you. Right. So you can definitely strike up those conversations with the property manager. You probably want to go a little bit higher in that organization and just talk to them and say, hey, look, I'm bringing like 5, 6, 7, 8 units on board. I'm going to be kind of a big whale for you. Is there something that you can do for me in return? I think anyone would welcome that kind of call at that point. So if you have a lot of properties, I don't think I'm going to scale too big in that sense in Miami, but you never know. If the margins are there, maybe I'd look at it. And just coming back to the whole like capital gain versus rental, I think it's important for your business to be able to have both, like those large lump sums of capital gains that can maybe help you acquire new assets, and also that reoccurring cash flow that's going to be able to help you out, just for the banks to give you loans and stuff like that. You can't be making all your money off one big flip every so often. You probably want to have a little bit of both.
Yeah, because you want to see regular income, right?
They do.
Yeah, that makes a lot of sense.
Yeah.
So tell me, what kind of returns do you typically get when you're doing these types of like buying pre-construction? Like what kind of returns are you seeing?
Like numbers?
Yeah.
So you really want to look at the property. You really want to look at like 1, 2 bedrooms, 3 bedrooms, and then again coming down to primary versus whether it's going to be an assignment sale, you're going to sell it to the market. That's going to really dictate what your returns are from a capital gain perspective. Looking at the markets right now, I just got like a 3 bedroom. That's going to be a primary. So anything like that's a 3 bedroom is probably going to be north of $1 million. You're probably downtown in Toronto, you're probably paying about $1,000, maybe $1,100, $1,200 per square foot on a new construction. And then 2 bedrooms would probably range from like, I don't know, 650 to like 8-ish. But you hold the property for like 2, 3, 4 years, and you see kind of like a 10 to 15% annual appreciation in terms of condo appreciation every single year. So if you're looking at $1 million property, you may be making like 150K a year, let's call it, in a stronger market.
So 10 to 15% off the price of the asset, but you're making more than that because you only put a certain amount down. So you're making some really good returns then.
So that's the best part about leverage. And the whole concept of leverage is just like, it astonishes me, because you can buy a property, and the average pre-construction property is, let's say on a $1 million property, they may ask for 20%. I like to find a project or a developer that's going to do it for less, for like, let's say 10%. Because if you're going to put a 10% down as opposed to the average one being 20%, well, you get 2 properties for the average 20%. Right. So if you can do that, and if you could hold multiple pre-construction properties while doing it, but timing it right, you don't want everything to close in 2023. You probably want to have one in 2023. You want to have one in maybe 2025, maybe another one years prior, 2021. So it's a longer term. You're not just going to put all your boats of money into this in 1 year, and then it's kind of scaled over a longer period of time. But 100%, you don't have a mortgage on these properties, which is great. So you don't have to come up with the money until like 2, 3, 4 years, and you just let the markets kind of do its course and just appreciate annually. And you start with your smaller properties. My first ones, all of my properties were very, very small, and they just kind of like scaled up over the years. I think now what I'm seeing here in Toronto is there's a big condos, because we're just coming out of like hopefully what is the end of closer to the pandemic state right now. But a lot of people said like the smaller 1 bedrooms and the smaller bachelors got really, really beat up in this market. Anything under 500 square foot. But
maybe it's a good time to buy then, right?
Oh, it very well could be. I mean, if we see certainty, and I'm always bullish on the Toronto markets, I think it's going to be great long term, given the economic hub that we have here, any hub in North America. Yeah. Just people are going to come back to the cities. But you also see a lot of people who have like flocked and gone into single detached homes in the suburbs and stuff like that. But I think the ones that got beat up a little bit hard on this were the bachelors and the 1 bedrooms.
Right, because like you're stuck in this little tiny apartment and nothing's even open, right? It's like,
and being like 400 square foot with no balcony would be tough. And then you got to take the elevators up and down, so it's tough. Yeah. But I don't think it's going to be like this for much, much longer. And you're right, that's very well a buying opportunity. Yeah. Because we know like in late 2019, before this pandemic hit, like you go into really nice selective buildings inside the city, and those bachelors are like, I've seen bachelors that are like close to $1 million, 1 bedrooms that are close to $1 million in really select unit. Right. And you could find a buying opportunity right now if you're willing to be a little bit bold like that. And I think some people should.
Yeah, interesting. So buy the pre-construction. So I want to get these sort of numbers out, right? So if we're talking about like a 10%, 10% is a lot per year for a property, right?
It could be.
But do you find that these pre-constructions appreciate faster than the regular type property? So if I bought one that was already made, right? So the one good thing about the buying pre-construction is definitely the leverage. That's really cool.
Yeah.
Right? If you only need to put down 10%, and like you could really leverage yourself up, and you can make some good money there. You can also lose a lot, I guess, right? But it's a gamble, and usually it's going up, right? Yeah. So the question is then, so if I put that money into just a regular property, how would the price appreciation compare, right? Like, like an existing one versus,
There's definitely premiums. I think there's a market out there that is willing to pay to be the first person in it.
Right.
And you can actually work really close with the builder if you wanted to choose your own specs, to choose your cabinets. You have these kinds of decisions that you can make throughout the purchasing process. I'm a little bit neutral for these type of things. I don't get overly emotional when it comes to my properties. I just more see it as like an income earning potential.
So someone else want kind of thing. Right?
Exactly.
Yeah.
So I wouldn't go for like the full marble granite, countertops if I'm not going to be living in it. For a primary, maybe I would, but you gotta kind of know what your exit strategy is before you kind of build it, before you decide to make those kinds of decisions. But coming back to your question, yes, I think there is a premium that people will pay for when it comes to living in a brand new building with a renowned developer, someone who's got a reputation.
Get those good builders, right?
Yeah. Exactly. Builders everything, because I've seen projects go completely sideways, and lawsuits happen, and they lost their. So you got to do it with someone with a reputation, done it before, And I like going to the sales center in person and asking these types of questions, like show me your credentials, show me what else you've done here, what's your estimated timeline to completion. You know, you can even get like really your realtor that you are working with needs to be very knowledgeable about these types of things. So coming down to like all these types of decisions when you're kind of setting up your business, like your accountant, your lawyer, your realtor, your mortgage broker, whoever you're working with, they got to know what you're doing. They got to be able to scale with you. So you kind of get those types of people working alongside you, and you kind of figure out who you like to work with based on your style. But it's very, very important to get good industry insight. Existing builds, like let's look at a 2010 versus, you know, a project that just came up in 2021. A lot of things change inside of, you know, from a style perspective inside of the unit itself. Maybe something 11 years later is going to be a little bit more modern. People may want to pay for that. Location's also going to be a big factor. And if you look at some of the older buildings, like buildings that are 20, 30 years old, you're going to pay a lot in terms of maintenance fees.
Right.
So maintenance fees are, you know, you have your mortgage that you're going to pay every single month, but then you got to pay for all the amenities and the maintenance. And some of these older buildings kind of put all that gas usage and electricity usage all kind of bundled into one. So that's a factor as well.
Yeah, it actually goes up a lot over time. Right?
It does.
The older the building, the more the maintenance is on a relative basis, right?
And buildings, and you could have plumbage issues, and you know, you may not have a reserve. Your condo management company may not have a reserve. So there's a lot of scenarios you got to be familiar with and knowledgeable about regarding existing builds. So all that stuff's kind of disclosed when you purchase the property, and your lawyer should run through it to make sure if it makes sense. But the new constructions, you're not really too worried about. In fact, you're going to have the lowest maintenance fees because it's a brand new building. Right. There shouldn't be too much to have to maintain, and it's going to be substantially less than a building that's 20, 30 years older. So I think people will like that, having that peace of mind, and some people will seek that out immediately just to purchase a brand new pre-construction. Right. And then coming back to that about how I like unloading the pre-construction inside of that interim occupancy period called an assignment sale. And I can find those types of buyers who really say, hey, I missed out on this project when it launched in like 2018, but it's ready now, and they are willing to pay a premium for it. Right,
to be the first one that's there. And then you probably also get a discount for buying pre-construction too, no?
You can. I'm a heavy negotiator, as you know. I like to make sure that I am getting the most value, the most bang for my buck, whether it comes to an upgrade or whether it's throwing a locker in, whether it's maybe throwing a parking in, depending on where you are, because these things are actually very expensive and they're add-ons.
Right.
So I like to make sure that I'm getting the best possible negotiation through the developer. I think there's other ways that you can do it as well. I personally am a high volume real estate client, so I'll always work in deals with whether it's my realtor in that sense, or we can go to the developer and ask for a kickback. I've got a kickback from developers as well. It's like,
so always negotiate.
Always. I
push it.
I do like.
What else can I get?
I am someone who pushes the envelope, believe it or not. Yeah. But I think you got to be in that sense that you got to take it seriously. You're running your own business. Yeah. You want to be able to put as much money back in your pocket so you can do it all again on the next asset.
Right.
And I don't think you want to leave anything on the table. So sometimes, do I get what I want all the time? No. Do I ask for the moon? Maybe I could, but I'd rather ask for it and have a little bit of the moon come back in my return than not ask for it at all.
Ask for the moon and get a nice slice of pie or something.
Sure, I'll take whatever I can get, whether it's just a solar eclipse or whatever it might be.
Yeah, there you go.
I'll take a sliver. So I think you got to put yourself in those kind of situations, and when you get into a little bit more of the high volume and more frequent sales, 100%, you're gonna find little gimmies here in the industry, especially in a down market. It's funny because, like, you know, you could go to these pockets, these developers 2-3 years ago and make those asks. They won't even give it to you. But I went, you know, I asked for a lot on my last one because it was a down market, and sure enough, they were able to meet on those conditions.
Right. Yeah. Strike when the market's not hot.
100%.
Right. Exactly. You know. So it's interesting. So I'm thinking about the numbers here, and like this sounds like a lot, right? I mean, like let's say if the property goes up by 10% per year, right? There's obviously a hot market. That's obviously. But like I could imagine, you know, like places like Austin or Nashville or something like that, they probably have this sort of thing too, right? Just like how Toronto's been going through a boom for seems like forever now, right?
Yeah.
If you're getting 10% on the actual property and you're leveraging it by 10 times, you're almost doubling your money every year.
Again, it comes down to a lot of like what the market is doing, what the price of the condo is that you purchased it.
But even if we're doing, you know, 5% on the property or 3% of the property, you know, that leverage that you're getting is very strong, right? Because if you're leveraging 10 times, even if the market's only 3%, you're making 30% a year. That's very good returns. And it's capital gains, right? So you get taxed less, right?
On a primary, you'd be able to avoid it. But really comes down to every single like market stability and what kind of condition that market is where you're investing. You know, Toronto condos actually didn't do too well last year in 2020,
right?
But home prices just soared up. Naturally, when you see a big discrepancy between detached homes and condos, people are going to start flocking down to the semis and the townhomes, and then hopefully the condos as well. So condos kind of got left behind last year, truthfully. And there's pros and cons in this business, right? Like I had to make a couple real estate sales last year that I probably could have got like 2x if I sold it in 2019, but I took a little bit of a hit. Did I walk away with profits? Yes. But I could have walked away with much more profits in a regular condition, like economic year. We just had a bad one here in Toronto last year.
I think across the board was it like the biggest drop in GDP in like all of history.
Well, New York, like cities like New York City got crushed, right? Like half. A lot of the working millennials and stuff like that, they all went back to their home states of like Florida or Alabama. I don't know. So there's those mass urban areas kind of got hit pretty hard last year because no one wanted to be in those cities in condos or apartments. So condos got left behind in some of those big urban areas, and detached homes saw great growth.
Right.
Whether you're in an urban area or whether you moved to like the GTA or the greater metropolitan areas, they saw substantial growth. But are you going to get 10 to 15 points every single year? No.
Right.
I think if the markets are good, yes. I've seen existing builds 30% year over year.
Yeah, that's a crazy kind of,
Those are exceptions. And when we first hit that boom, I think it was like 2017, 2018, something like that. Like we were seeing it, but then of course, like, a couple years later when this happened, now they weren't selling at those highs. But there's always gonna be pros and cons. I think if you just stay the course, you keep, loading up with some of those. I like the strategy of pre-construction, but whether you're doing it for investment and you're gonna be a landlord or something, like just hold the properties, hold it as long as you can. And if it comes to having to take possession of the pre-construction, see if that's manageable. See if you can fit those numbers in. Does it make sense to sell in a down market? It really comes down to your certain circumstances. Right. If you can do a long-term buy and hold, I think that's a good idea. And you're just going to come back around when the market's stronger. But it really comes down to whether you're in a position where the banks are going to give you those types of loans when you're holding a lot of properties like that. So you may be forced to sell. But I think if you just consistently do this kind of method, you should be able to come out on top. I don't think there hasn't been one property I think where I haven't made profits on it. Yeah. There's been some where the profits have taken a hit because of certain market conditions, but I think overall I've been consistent with that strategy that it's protected me from it. But yeah, you're not always going to have your 10 to 15% year over year growth. That's more in a stronger market. Yeah. But if you hold to that property for as long as you can, I think you could see a good growth for those years that you hold it.
Yeah, I mean, for me, like just doing the numbers in my head, like let's say it's growing at inflation 2 or 3%. Like even that's like 20 to 30% because you're leveraged, right? Yeah. That's still 20 to 30% per year. It's very hard to find those kind of returns anywhere, right? And that's like in a not like a super great market. If you're doing like 10%, that's like you doubled your money in that year, right? Like that's amazing. Yeah. Right. So anywhere from 20 to 100%, that sounds really nice to me. Obviously, there's a chance it'll fall. Yeah. But if you're doing this over a long period of time, you might hit some rough patches. Yeah. But make sure that you're watching your risks well. Don't sell, like you said, into those types of markets. Maybe take possession if you need to. Right. It sounds very interesting to me.
Having an exit strategy is very important. Yeah. Obviously, there's an ideal course of action that you want to exit on, which always has to be thought out in advance. But having a fallback is equally just as important. Just making sure that you are protecting yourself, because when those market conditions that are unfavorable do come around, that you know what to do in that circumstance to protect yourself.
Yeah, I guess that makes sense too. The different closing dates, right? 100%. That's probably why you want to stagger as well, because if you have them all in 1 year and the market turns south in that specific year, you're kind of screwed, right? But if you have them staggered among different years, then you can protect yourself, I would imagine, a lot better that way, right?
Yeah, exactly. And I think that's very important. That window of when those close dates are occurring are very important. I wouldn't do anything in the same year. I've got multiple that are lined up year after year. Mm-hmm. I think that's okay. But at the same time, like, you know, you could still come into a little bit of a trap when it's an unfavorable market condition and have to be forced to sell.
Right.
But again, it's really rare that you don't, with all that appreciation in the years prior that you purchased it, you're still coming out on top. You're still coming out in a pretty good circumstance. And if you're consistent with that strategy, you'll be okay.
Yeah, it makes sense. You're making me want to do this now. You know, I wouldn't mind a nice 30 to 100% returns per year. That sounds great to me.
The ROI can be favorable, and the power of leverage is a really kind of important.
That's really what it is. That's really what this is about. It's about leverage, right?
Leverage and of course compounded interest, because you look at those annual appreciation. It's leveraging off the total purchase price, not of your down payment. So you could like come in and, like, let's say on $1 million property, only have to put your 10% down, which would be $100K. But it could be growing at 6%, 8, 9, 10% at the top of $1 million, and compound that every single year.
Right. So you're making $60,000 on your $100,000. You know, that's amazing per year. Like,
that's a pretty good ROI.
That's a really nice ROI. Yeah, definitely, man. Definitely. Awesome, man. Cool. All right. Well, I think it's been a great conversation. Is there anything else that you want to talk about with?
Again, just coming back to that whole rental perspective, understanding doing it from primary is very it's a great benefiting factor. If you could do it from your primary residence, you avoid your capital gain tax, and you can kind of scale up. Just do it for yourself. I did it working in software and tech. There's just a point where the real estate business was kind of growing, and assets shouldn't have been kept under my name. Right. That's where I kind of continued on a sole proprietorship, and then
always get a corporation.
if you can incorporate yourself, there's just so many benefits to doing it that way, and then purchase your real estate or any assets that you have. That's appreciation. You're seeing it under the corporation as opposed to doing it under your own name. Yeah. And then, you know, always look at those areas. Is it a good metropolitan area? You know, is it a good area, urban area with a lot of growth? Maybe if you're doing it from a rental perspective, have it close to the universities, or have it close to like a tech hub across North America. And then look at those pre-construction properties that you're not going to pay the developer your 20%. If you can have multiple properties with that same, what would normally be a 20% down payment, and you could do it to 2 properties, you just 2x your leverage capability at that point.
Yeah, definitely.
And then space out the sale years. Make sure it's not in the same year. I will say an FYI is that the developer is typically 6 to 12 months delayed. So usually what you do see, like if they're going to say it's going to be finished in 2023, chances are not, especially now in current conditions where construction is like very, very slow. Getting materials is like it's a big delay in terms of the construction timelines. So again, work with your industry professionals. I actually have like a construction contact that I talk to, and if I can find out who's working these projects, I like to have insight as to where my construction timelines are with these developers, so I can kind of get direct access from that. So that helps me kind of know when I can expect these units to close. But don't do it in the same year. Try and do it like spaced out, but always you could kind of almost guarantee a developer delay at that point. And then when acquiring the properties, just make sure that you know what those exit strategies look like, and then have your fallback exit strategy for anything that could be a curveball thrown in your direction. Because you asked me in 2017, 2018, would we be in like our current market conditions we are like right now? I'd be like, who are you, man? Like
the best is seeing those like people that recorded videos are like, 2020 is going to be a great year, you know? It's hilarious watching that.
I remember I had like a caption on my Instagram story, and it was like right at the start of 2020, and it was like based after like one of my favorite rappers who's like this UK guy, Dave, and he had a song called Vacation. He's like, this year's all about vacations, and I like posted that at the start of 2020. We went to like a full airline shutdown, no travel like permitted, every restriction possible. I was like, shot myself in the foot on that one.
That's hilarious, man. Good time.
You gotta be prepared for the worst, I guess, and that's just why it's important to have those fallback exit strategies. Just because you get a lot of curveballs sent your way, or just stuff that you just can't foresee. And I think you're just smart in business in general if you can be super paranoid about those types of things, and think of the worst case scenarios. I like to always be optimistic, but also just be super pessimistic that if something were to go sideways, I've protected myself and my assets.
Yeah, makes sense. Cool, awesome. Well, it's been a great conversation, Matt. This has been awesome. Thanks for being on our YouTube and everything else. And welcome to the Lumiwealth team, you know?
I love it. It was great being with you all today. I hope you guys got some good insight out of it.
There you go.
And who knows, maybe we'll do a follow-up sometime soon.
Yeah, for sure. Definitely. Cool. Thanks again, man.
Thanks, buddy.
Cheers.